Hello, everyone. Welcome to another episode of Investment Insights with IVoT. I'm your host, Andrew Tang, Chief Investment Officer of Turner Financial Group, and it's the week of July 22nd, 2024. Now, each week I talk about three investment-related recent events and what grabbed my attention, and I'm here to tell you all about it. Now, a quick reminder that this video contains forward-looking statements, and the content of this video is strictly for informational and educational purposes only, and these are not investment advice. So, for the first thing I want to talk about is the usual round of economic updates for the week. Now, first, before we talk about the home front, I want to talk about China. Now, China surprised the world with a 10 basis points rate cut out of the blue. And it just goes to show what problems China have underneath their economy. So there are a couple of things that I do want to talk about. First is that there is a slowdown in growth for China. After decades of rapid growth of 5+%, they're actually seeing a tremendous slowdown, and it's hitting the country quite significantly. And it's partly due to the maturation of the economy and the diminishing return of the investments, right? We see a lot of foreign investors are pulling the money out. Now, part of that reason is because of the trade tensions that exist between China and the rest of the world. But namely, let's say the Trump administration back in the days have started the tariffs and the strong rhetoric between US and China. Protect the US properties and security. And that's where the trade tensions with US and China started. And that has overall hurt the Chinese economy, especially for years that has been happening. Another element that is causing a slowdown in China is the real estate crisis. Now, the property sector is a huge contributor to China's economy, and it has been facing, quite a bit of significant changes. We see a lot of developers in the Chinese real estate sector. They're burdened with heavy debt. A lack of interest, with the high rise in real estate prices, that makes buying real estate really not affordable. So when there is a natural downturn in the economy, the first sector is going to get hit hard. It's going to be real estate sector, because many of the investors in Chinese real estate, they are betting that the prices will continue to climb. And so if the cost of the mortgaging or paying for these real estate are going to be coming to some type of trouble, then you're going to see the dominoes starts to fall, and you're going to see the cards starts to fall. And that is not a good thing. Another contributor is the debt level. Both corporate and government debt levels are very high in China. So that leads to quite a bit of concern about the financial stability of their economy, right? Another element that caused the China slowdown is the demographics. As we see the aging populations growing, and the shrinking workforce is creating some long-term challenges for the Chinese economy and the productivity. COVID-19 also play a part, because the pandemic hit China actually quite hard. And we see that the country struggled to come out of this pandemic, even though Europe and US came out of the pandemic a little bit earlier. China was still suffering for quite a while, and that took quite a hit on their economy as well. And on top of all that, there's also regulatory crackdown in China. Increased government regulations on sectors such as technology, education, and finance have created a lot of uncertainty. And that's really no wonder why investors have pulled out of China. So when foreign money leaves China, that is going to cause a slowdown in their economy. And I think to this day, they're still suffering from youth unemployment. So there's a huge population that are unemployed, that are young. And because the numbers are so significant, the Chinese government stopped reporting it. So therefore, we can see why China was, I wouldn't say rushing, but they definitely surprised the world with the 10 basis points rate cut. We first saw Bank of Canada do it. EBC in Europe, they did it also with 25 basis points. US hasn't done it yet, and we're looking for a September rate cut. The probability again is almost certain. But China, what they have done earlier this week was quite a surprise to all of us here in the US. Now, back in the home front, US existing home sales have dropped 5.4%, and that is the sharpest decline since 2022. Now, I want to bring up two charts here. One chart shows the sales number, how it has dropped, 5.4%. And the other chart is the home prices. So we can see that this sales data comes as the median home prices reaches an all-time high. So with these situations happening at once, what it really brings is that it brings a standstill posture for sellers and buyers, right? So the sellers are holding off because they're waiting for the mortgage rates to drop. And buyers, they're not biting, they're not buying because due to high prices. And according to the National Association of Realtors chief economist, he's seeing a shift for this market from a seller's market to a buyer's market. So that's what happens when prices of homes continue to go up, and the cash buyers, they basically are running dry. So when all the cash buyers are gone, this is going to be a buyer's market, and we're seeing exactly that happening. Another economic update is the advanced estimate of GDP that came in at 2.8% for the second quarter versus 1.4% for Q1, and these are annual rates. Just want to remind that. Now, this advanced estimate of GDP for Q2 at annual rate 2.8%, it exceeded expectations as economists are only expecting 2%. Now, I wouldn't get too excited about this number because underneath this number, 2.8%, I know it looks great, but what it really came from, we believe it's from inventory buildup. So the restocking of inventory is causing this GDP number to go up. And because this is an inventory-induced GDP growth, it might not be a good thing because the inventory still needs to be sold. And if it's not sold, it can actually backfire, for the future numbers down. So we will see, how that will play out. Another economic data we received this week was the jobless claims number that came in at 235,000 versus the estimate of 240,000. So this number came in a little bit better. So less people are claiming unemployment, and last week was 245. But however, we are seeing the jobless claims numbers are starting to go up slightly from the all-time lows of the 2022, for example. Continued unemployment came in at 1.8 million versus last week of 1.86 million. So this week, we are seeing a little bit of a relief, but overall, we are seeing the shift of initial jobless claims and continuing claim move up. And again, we believe this is related to the delay AI effect on a multiple number of jobs that we talked about several weeks ago. Another economic data that came in this week was durable goods. It came in at a negative 6.6% versus 0.3%. That's what is expected. Now, the drop followed only a very modest 0.1% gain in May. And this decline is primarily due to the significant reduction in orders for transportation equipment. So that includes equipment for automobiles, railroads, ships, vehicles, and other vessels. So why is that important? Well, a drop in durable goods can give signals to a drop in consumer sentiments and so on and so forth. So the second thing I want to talk about is none other than the big IT meltdown event that happened last Friday. So it stems from a software update from CrowdStrike, and it's related to Microsoft and is crippled flights, banks, and markets. So CrowdStrike confirmed that a content update it has implemented has caused the crash. So the good thing is this is not caused by any bad actors or any type of cyber attack or such. It was just a glitch or a bug from a software update. However, the results are quite serious because many systems are using Windows operating system, and the infamous blue screen of death that we all some way somehow have came across. And so it caused a lot of panic, and the meltdown hasn't, entirely gone away. CrowdStrike has been working on this for over 5 days. And we have learned that Delta Airlines, they're still having issues. They still have to cancel flights because the system that tracks and book the staff to run their planes, they're still not up and running. And so till this day, we learned that the system is back up, but for a long 4 or 5 day period, we are seeing that the market has been jittery, and the airline especially has been hit pretty hard. Now, the good thing is that Mac users and Linux users, they are not affected by this glitch, right? So I want to quote somebody here. So this is coming from a software analyst for an investment bank called D.A. Davidson. And I quote, "The tech meltdown is not something that Microsoft can accept." Okay, this came from the software analyst. They'll have to go back to figure out how not to allow any other products that can connect to their platform to cause this type of catastrophe. So even though the fault isn't on them, there will be a cost and implications for them to prevent this from happening again. So again, this is quite serious, and in my view, it can happen again. So one thing I did learn from all this event is that I've been a lifelong PC user, but guess what? Now I'm going to have to learn to use a Mac and have that system up and running as a backup. This is the only way that I can assure that I will have a continuation, should a PC come across any such meltdown. And we know for sure that such an event can definitely happen again. Now, the third thing is OpenAI and ChatGPT. I'm sure you all have heard about this large language model and how it has basically transformed the world. Now, this week, OpenAI announced that it has released what's called ChatGPT 4.0 Mini, and what it means for the future of AI as the costs come down dramatically. So what is Mini? So Mini is the latest iteration of their language model that provide powerful capabilities similar to its predecessor, which is ChatGPT 4.0. And prior to that, it was ChatGPT 3.5 Turbo. Now, however, it's similar, but is more affordable. So it makes advanced AI accessible to a broader range of users and businesses, and this is very important. So the introduction of ChatGPT 4.0 Mini is a strategic move to capture market shares, right? By targeting users who are using this robust AI solutions without the hefty price tag, right? It is also very likely to put pressure on competitors to basically lower their prices. So from a conversation that I had with an analyst earlier this week, we talked about the implication of the release of Mini, and we believe Mini, it's going to be quite significant to this AI landscape, right? Instead of using the large language model, the smaller language model can do just as good as a job, but with a significant cost reduction. So what that means is that the necessity or the need for heavier compute also have been reduced quite significantly. And the implications is huge because specialized sectors, such as education, healthcare, finance, and sometimes technology as well, they can use these small language models instead of the large language model because of the dramatic decrease in cost. And so it is overall increasing efficiency significantly. So OpenAI, as I learned, OpenAI is not the only company that is developing these small language models or the minis, right? Another company by the name of Hugging Face and also Mistra AI, who is in partnership with NVIDIA, they're also developing these small language models. Now, what does it all mean? I think one of the most important thing for me to explain this further is to talk about the unit of measure. So how do we measure all this, with the cost? So let me start by explaining that the ChatGPT 4o mini, the newest iteration, cost 15 cents per 1 million input tokens. Okay, 15 cents for 1 million input tokens. Now, ChatGPT 4o, not the mini version, the large language model, it costs 60 cents per 1 million input tokens. So we went from 60 cents to 15 cents. Now let's take a step back and look at ChatGPT 3.5 Turbo. Now 3.5 Turbo costs $1.50 per a million input and $3 per 1 million output tokens, right? So ChatGPT 4 mini is 90% cheaper than ChatGPT 3.5 Turbo input and 80% cheaper than ChatGPT 3.5 Turbo output. So the cost is significant. And what are we talking about? We're only talking about a couple of months of advances, and we're already seeing this dramatic cost decline. So how do we relate all this to a human knowledge worker? So here's where it gets really interesting. So a human knowledge worker costs somewhere around $50,000 to $100,000 annually, right? I think we all can agree with that. Well, in the US at least, if we include benefits, right, for employers, for the companies, if we include benefits, they can add another 30%, up to 30%, let's just say, right? So on average, each worker works about 40 hours per week, 50 working weeks, so altogether roughly about 2,000 hours per year, all right? So the operational cost of ChatGPT 4o, as early discussion, is significantly lower. So let's assume the task require 1 million token of input and output each month, which translate to input token 1 million at 15 cents equals $150. Output token 1 million at 60 cents equals to $600. So the total monthly cost, $150 and plus $600 is $750, right? So the annual cost will be $750 times 12, which happens to be a round number at $9,000. So what does this all mean? A human worker will cost approximately $97,500 per year. I know it's a little bit high, especially for those of the viewers that are not in the United States here. But in the US, an average knowledge worker, human knowledge worker, costs about $97,500 per year. ChatGPT 4o, and I'm not even talking about mini, ChatGPT 4o cost about $9,000 per year. So here's the difference. $97,500 per year for humans and $9,000 per year for ChatGPT 4o. So ChatGPT 4o, it's equal to 9.2% cost of employing human knowledge worker. So what's the takeaway from all this? Well, one thing I can say for sure is that AI is becoming a necessary part of workflow here, meaning AI is not going away. Humans need a break. Humans get sick. Machines, they don't. And I'm not talking about machine, this is just basically software. So it is very interesting. Unfortunately, this is all the time we have for this week. I hope you enjoy all the topics that we went over this week. Hit the like button if you like this video and hit the subscribe if you want to continue to get notification for such videos and content. Be sure to look for the IVoT Daily Digest. And again, we welcome your suggestions, comments, and questions. So leave a comment below. And until then, I'll see you next week.